And I think, last time at the previous MetaWeek, we did the investment panel very late in the day as well. And there was like a full house, and there were lines, and people were lining up to every panelist and venture capital representative. So it's my honor to have this amazing all-star lineup on the stage today, best of the best. I would like to give it up to Sean Munir, CEO of Agera Ventures, who's going to moderate this session for you guys. Please give it up for Sean. Sean? I'll let you introduce your moderators and, your panelists, and guys, you can come up on stage too. Thank you.
Thank you very much. Hello, everybody. I'm the founder and CEO of Agera Ventures, and I'm really excited to be moderating this panel today about investing in Web3. We're going to talk about the do's and don'ts. We only have 40 minutes together, but my goal is to navigate the jungle of investing in Web3. I want to pack a lot of insights into this session, and of course, I need your help to achieve this, so make sure to have questions ready for the Q&A later. And if we're lucky, we'll get out some secrets out of these experts sitting next to me here. So just out of curiosity, how many here has invested in a Web3 project or blockchain project before? Raise your hands. So we have some here. So in order to make this engaging, I would like the audience to applaud if you agree with the statement, or boo if you disagree with the statement. So let's do a test. My statement is blockchain will revolutionize the fintech industry and is the new financial industry. Okay. So my other statement would be crypto is going to zero and you should put your money in the bank. Right. Okay. Now we have the parameters. A really short introduction of each panelist. We're very fortunate to have some heavy hitters with us here today. So our first panelist, Said, I'll introduce you first. Said Al-Darmaki, founder and CEO of Shisha Finance, co-founder of Alphabet Digital Currency Fund. Before that, he was working at Abu Dhabi Investment Authority, one of the largest wealth funds in the world. Traditional investment background and merged into crypto 6 years ago. On his free time, he likes to play football and tennis. So once he retires, maybe Cristiano Ronaldo should be aware.
I hope so.
Next to the right is Paula Tavangar. She is the investment principal at Swissborg Ventures. Swissborg is a crypto wealth management company which facilitates investments. Swiss Ventures is an investment arm. She's a serial entrepreneur in fintech, blockchain, and quantitative finance space. She has a traditional finance background, and she is using in the crypto space. In her free time, she likes to shoot guns. So, Paula, I'm very jealous of you. And then to the right, we have Sandeep Mehta. Is an industry leader in the global financial community, having overall 3 decades of experience for corporate clients, high-net individuals, and family offices. He's a goodwill ambassador for global organization. He's also an angel investor into 20 startups in the blockchain space. In his free time, he lectures young entrepreneurs on business, so make sure to grab him after the discussions. Last but not least,
thank you.
Alexandre Raffin, co-founder and CEO of Gains Associates, is the world's first and biggest decentralized VC. They did 21 million of deals last year, and their track record includes unicorn like Avalanche, Hashgraph, and Quant Network. He's French, and on his free time, he likes to complete summits that are higher than 3,000 meters. So respect.
Thank you.
Please welcome and give a warm applause to these 4 amazing panelists.
Thank you.
Thank you.
So let's start with the questions. This is one for all. For anyone new investing into Web3, what is the first thing you'd like them to know?
I think for me is just to have a basic understanding of crypto or blockchain technology, do a bit of research, get educated. There's a lot of resources online. And then once you have the basic understanding, then you can make a better judgment on investing or not.
Yeah, maybe I can just add a bit to that point with the research. I think that we shouldn't be separating so much institutional from retail once it comes to investment. Like when you're considering investing your money at the end of the day, like that's your most valuable asset, right? So you should take it very, very seriously. And I think that it's very nice to treat investments as institutions do. So for example, in Swissborg Ventures, our main criteria are we start with the team. So it's very important for the team to have experience, not only in blockchain particularly, but in business, because I'm seeing that a lot in the industry. There's some incredibly bright guys, but they never run a business before. So sometimes it doesn't matter how great of a developer you are if you don't know actually how to manage your balance sheet. Security is another factor. Like I would always, as a private investor, I would always check for an audit or any source of data that can prove me that this project is actually secured. And also, I think that backing is very important. Like when you see that a project was already backed by VCs or they have strategic partners, this means a lot because, as I said, as every startup, usually the founders are not so experienced, so they really need the support of the bigger guys like funds and other partners from the industry that can help them to succeed in the sector.
Thank you, Paula and Saeed. I think I compliment with what you say. One of the things which I would break this question into two parts is, if you are just a retail investor, first thing is you open up a wallet as a new investor and then buy some Bitcoins and Ethereum and few of the tokens and start. Believe in the system. Second thing, if you are an institutional investor, definitely what Paula said makes very important meaning, and that's what I wear multiple hats when I invest, and I also make sure that I look into teams, their governance, their plans, their project, and what kind of board members do they have, because young people, they need guidance, they need somebody. So we make sure that if you are a new investors into Web3, into tokenizations, you do a little bit of due diligence when you are in a wearing a hat of a venture capitalist, of a other kind of investors. But as a retail investor, I was just say, jump in.
Yeah, I would agree absolutely with Sandeep. Just getting started trumps everything. And to me, it feels very risky and foolish to not be invested in crypto. When you think that it could be the future of the world, how we exchange value at scale, not having a stake in that is very weird to me, to say the least.
I'll give an applause to that.
Thank you.
So this question is to you, Paolo, and then for the rest of the panelists. What are the key criteria for your company to make a decision to invest or not?
I think that I already shared some of the criteria, but thank you for the question. We in Swissborg Ventures are focusing, as I said, mainly on the team. That's very important for us, like the background of the team, their experience in business, in blockchain, in technology, their network. And something I missed to say earlier is the utility of the token. That's something that we're focusing a lot on, because sometimes you see these amazing projects and they have really bright future, but the value of the token does not reflect the value of the equity. Like the business model does not revolve around distributing the profits of the platform through the token. So that's something that I would always look into, like the tokenomics specifically and the particular utilities of the token. So this is like an advice to projects to add as many utilities as possible and to make the platform token very valuable. And the similar, basically, for the investors that are looking for new projects. And last, we look a lot into valuations. I think that we are all aware that in the last few months, valuations dropped drastically. And the secondary markets dropped. Consequently, we were expecting that the private market valuations will drop too, but this didn't happen immediately. I still see projects that are really hoping to raise at 100, 200 million valuations, which at the moment are very unrealistic. So if I need maybe to highlight again, it would be team, utility of the token, and valuation and security.
Yeah, I think when our organization looks into any project, the first step for us is to do thorough research and due diligence on the project and the team behind it. That would also include the business model, the utility of the token, what's their roadmap, what's their strategy, do they have the budget, do they have any funding, is it backed by any other tier 1 VCs? There's a lot of factors to consider, but I think what's important is if they pass the due diligence and research, then we have conversations with the founders of these projects. And we have to ask them challenging questions or give them feedback. And if the initial kind of response to that is, conservativeness or unwillingness to kind of change things around slightly or tweak things, then that's usually not a good sign for us. So I think it's important to talk to people, to talk to the team, because only when you talk to them, you can see if they're actually passionate about what they're doing, if they believe in what they're doing, and if they have it properly planned out. So it's just, just do your homework and talk to the people behind the project. And obviously valuation is important too, and a lot of other factors are important. But I think for me, number one is the team and what their attitude is like in terms of feedback and in terms of passion about what they're doing.
I would also add to some of the points which has been not covered is, one of the few things which I check with people when we want to invest is, where's your risk register? Because what do you consider as an organization where in your project you have assumed that there is a lot of risk? Any company which comes to me and say, I don't have a risk, I would not go in investing, because I would like to have investment in companies which understands what are the risks, what are their plans for mitigation. Let there be hundreds of risks. I will be more than happy to invest in a company which has more chance of failure because they knew the risk, rather than somebody who's overconfident and say, yeah, we are going to be $1 billion market and we are going to make 100 million and definitely we are going to have 100x. No, that's not where I would put my money into. I would put my money into where the team, like he said, is we have a passionate team, we have a passionate product, people are working, they have a very team coherence and all the normal checklist tick marks like governance and all that. But more than that, I want to invest in where people understand that there is a risk and the investors knows, yes, there are risks and he may even lose his money, but at least I know the company understands where there is risk and what are the plans to mitigate the risk besides the normal points. That's one of a key driver.
Yeah, I guess I would add that a simple heuristic is how hard is it to get in? And over my 5 years in crypto, I've seen a lot of things, the good, the bad, things I can't really mention here, but people in crypto tend to over-represent things. And so just to explain a bit more the power dynamics between projects and investors, there's on the one hand the projects that struggle and they're kind of begging for funds, you can feel it. And on the other hand, you have the projects that are oversubscribed. Everyone wants to get in them, right? And so it's about bringing the most value and fighting to earn our place on the cap table and then bringing these top tier projects to our community, what we do at Gains. And that's something for which there is really no shortcut besides the hard work, the years in the space to build the connections and the experience to be able to bring this value.
Thank you. I want to touch on the topic of being oversubscribed. So oversubscribed is, let's say, a project is checks all your boxes. Everyone wants to invest into the project. How do you guys change your strategy, or what is your strategy to be able to get on that cap table?
Well, I might take that. I think that first thing is obviously building your reputation and network, but we always, in Swissborg Ventures, we always approach new projects in terms of what value add we can have for them, not what is our expectation from the investment on their end and how it will perform. So I think that once you approach projects this way, it's way more easier to collaborate with them. And for example, we would really push to go into rounds, for example, in DeFi or anything that can be a direct partnership for us and where we can deploy all our resources. So I guess with these terms, it just becomes easier. I don't think that every investor is suitable for every project.
Yeah, for me, I think it's very important to just show the value that you can bring to the table. You can ask you can ask the project, okay, you have this many people on the cap table. Is there any gaps that you might have that we can fill? And we're actively supporting a lot of Web3 startups. We have about 75 projects in the portfolio now. And, it's just finding out what they need and showing that you can actually add value. And it always helps to have a track record and a reputation and, showing other projects, that you've worked with. They can maybe ask them about you as an investor. And I think that it's just show that you really want to invest and why you want to invest and what value you can bring.
There's a lot of things that come into convincing a project to let you invest, but I'll mention one which is at the essence of what we're doing at Gains, since we are a decentralized VC, so a community of investors. And compared to the traditional VCs, we bring organic community support. And at the end of the day, you've heard the word community a lot of times, but it is real and you have to do it well. And so getting to know people, being in the community every day, putting in the work, and simple actions like liking on Twitter and everything, that's what we push our guys to do every day. And everything adds up, and then that's how you hear about projects, because they show up on the feeds because of the algorithms, because of the work that everyone puts in. And I would mention GME, GameStop. I think that was actually a founding event that happened and really marked the world and showed that the strength in numbers, in people, right? Thousands of people could actually fight and defeat the big institutional VCs and so on, prove them wrong. And it was kind of negative in that story, but we can do it positively and bring more value. And that's what we're doing at Gains once again.
On the topic of values, let's bring some value to the audience here. From an investment perspective, what do you think will be the next hottest markets in Web3 to invest in and going forward?
I think at the moment, metaverse seems to be the hot topic. Yes, the market in general has slowed down, but I think it kind of reminds me of the use case of security tokens when it came out a few years ago. I angel invested in a couple of security token projects. One of them's doing really well. But I think it's just the timing and the maturity of the technology and the actual kind of hardware that supports metaverse in terms of VR, AR. I don't think it's anywhere near ready yet. I think there's a lot of platforms that are shouting and talking about what they're doing, but the substance and the actual tech isn't there yet. I think it's going to take a few more years, but it doesn't hurt to kind of take a risk, early risk on some of these projects and see what happens. But I think there's a lot of use cases that are always coming out and evolving, and we're monitoring all the different use cases and all the different blockchain networks out there.
Let's do Sandeep first.
Yeah, okay, thank you. I agree with him. Metaverse is there, and we have a lot of things. We have not even identified the general infrastructure industries, hospitalities, hospitals, everything can be on metaverse. So metaverse is, if you look, a large utility is there. So definitely that's the next thing. But I also feel the young people, when I have a teenage daughter, and I know that gamifications, they want games, they want to earn tokens, they want to earn something like physical coins coming to them for them to play. So game is another thing which I think will grow quite large, where until now all the players were not getting anything, but they had to pay to get. Now they will get pay to play the game. So I think this also is a very big opportunity in the space. Thank you.
I just wanted to add something here because I slightly disagree that, at least at the moment, metaverse is the hottest topic. I think in the beginning of the year, definitely, we were flooded with metaverse projects. Everybody was talking about metaverse. And I think that once the market crashed and all the inefficiencies came to the surface, people came to their senses. And then they realized that actually first we need the infrastructure and we need the basics. And I think that now I'm very actively following what's happening in the private markets every week. We have this blockchain brief where we share all the VC deals, not all, but like the most important VC deals that happen on a weekly basis. And what I've been observing lately is like since the crash happened, the biggest deals and the most important ones are happening in infrastructure, in security solutions, in over-collateralized platforms, because we already saw what happens when these are mismanaged. So I think that now there is a bit more of interest in the basics, and eventually once we start recovering again, people would be able to start looking again into gamify, metaverse, and all those sectors.
Yes, I think there are many upcoming trends in crypto, like metaverse and gaming for sure, but the one I believe in the most is social networks. And we're actually building UMeme, which is the Web3 social network for memes. And social networks is a huge market. Young people spend on average 3 hours per day on social media, and some up to 9 hours. So that's insane value created for Snapchat, Instagram, TikTok. And we are all sharing our lives, creating value for these multi-billion-dollar companies and getting nothing in return. And the worst thing is that these social networks are actually not social. Chamath Palihapitiya, a former executive at Facebook and a famous billionaire, said that these social networks are ripping apart the fabric of society. And these are very strong words. And so for all these reasons, we're building UMeme, which is the future social network of the web. And one, it will redistribute value to the users. And two, which is even more important, it doesn't put unrealistic standards on people. And memes are just amazing for that, because you don't judge memes. It's very simple, and everyone loves memes. Who doesn't, right? So, and we don't need to be serious to change the world. We can actually change it one meme at a time, one smile at a time, and that's what we're doing with UMeme.
Thank you very much for sharing these secrets. So as industry leaders, I want to transition the conversation over to the current market. What's your take on the bear market we are in now, and how does that affect your investment strategy?
Yeah, I can say that if you look in a longer period, over a decade, we will have multiple bear and bull markets. So that is always a global trend happening in any financial industry over a decade. So personally, I feel this bear market has affected a lot of people, because a lot of trust was built in the last 2-3 years, and with this crash, that trust has been questioned. Are these people real? Even genuine projects, genuine companies, they are getting the fear factor. But I think over a longer period, the good ones will stay. We are at a very nascent stage. When we had internet coming, there were companies which we thought will become very big, and after being big, they could not sustain and they crashed. We have example of Nokia and BlackBerry and other kind of things. So in this stage, what we are in this technology, I think we'll have a lot of companies which will fall, a lot of companies which will grow. We will find a lot of scammers. We'll find a lot of projects which were hyped, got a lot of money and crashed. Things will happen. I'm even worried that some of the stable coins, they are not really unstable, because when they get so much of fiat, when you buy a stable coin, you give your physical US dollar and get USDT or BUSD and all this. And they collect billions of dollars. Now, when they invest, if they fail, the stable coin could be failing. So we are in a stage where we are on a lessons learning, and I think this bear market is going to give us a lot of learning, and we need to improve. And eventually, good companies which are not aggressive but has steady growth plan for a decade, we'll see a lot of change, and eventually a bull market will come up.
I think we've seen in the past that the macro economy is correlated to crypto and risky markets, usually in times of extreme. The previous extreme was the pandemic. Macro situation was really bad. Everybody was selling and the market went down. Nowadays it's high inflation, high interest rate. So I think this current macro situation is probably going to last for another 3 months to a year. So I reckon we're probably going to be going sideways and flat here for the next few months to a year, unless some major kind of news comes out, like, I don't know, Microsoft or Apple or Google announces that they've got approval from their shareholders to get Bitcoin on their balance sheet or something like that. It would have to be really significant. But I don't see kind of major growth in the market for the next 3 months to a year. In terms of what we're doing, this bear market is actually very good for us because we're helping and actively supporting very early stage Web3 startups. And usually in these kind of markets is when people who are serious and passionate about what they do come out, and they come out with innovative ideas and great ideas, and we want to support that. So we're not seeing a slowdown in the quality of projects that are out there. Maybe investors are being more selective and more cautious, but I think there's still a lot of money that's going into Web3 considering the current market. And we're happy with things at the moment, and we expect things in the next year or so to improve.
I would very much agree with Said. Actually, the biggest mistakes you can make are during the bull markets. The bear markets, it's very tough, of course, but it's also nice in a way. And I think it's just a part of life. Everything is a cycle, right? So you have the bear, you have the bull, and you have to go through both of them. And the best deals happen in the bear market for sure. That's what we've seen over the 5 years that we have been through. So I guess the only thing is to survive, and that's pretty much it. And the bear market cleans the space just by itself. So we have much better conversations. It's much easier to make good investments in the bear market because you have people who are here serious. And actually, just a quick tip, like one of the best simple predictor of success for a startup is the quality and frequency of their updates. So if they are diligent with their updates in the bear market, you have the time, you can see their progress, you can see if they're serious, and then you can choose to make a decision.
So, yeah, I think that there are two aspects into it. One is the macro, and the situation that we are currently in is quite different than what we had lived before. And currently we're in a raising interest rates environment. US is about to go into a recession. And this, as much as we like to think of crypto as alternative asset class, it still gets affected by the money supply in the economy. So I don't think that there's anybody who can particularly predict when this thing is going to end, because it's going to be driven by the economic cycle. And we don't know when the economy will start recovering. So this is the first part. And the second one is simply in terms of cycle, I fully agree with, I think that everybody repeated the same thing, that down cycles are really great for creators, are really great for early stage investors, because somehow the market just slows down, and then you have the space to create and to build new projects, to build new ventures, and to fix inefficiencies that are already happening in the markets. So definitely I think that this is a great opportunity to invest at a slower pace.
So I want to transition the conversation into don'ts of investing. So what are some of the red flags you guys see to not to invest?
I think you should definitely look out for red flags, false promises, too high valuations, just unrealistic kind of roadmap and strategy in place. You just need to kind of ask the right questions. Don't take anything for granted, and don't rush your decision as well. Take the time that you need to find out everything that you can about a project before you decide if you're going to invest or not.
Something I really see as a red flag, and it's quite crazy that such presentations come to institutions, to VCs, where they have dedicated research teams, and it's like really easy to double check the facts. Don't always trust when you see a pitch deck or when you see a website, a presentation. Many of the things there might not be backed up. Most of the things, when you actually go into detail and you ask, the founders would say, "Oh, that's something we plan to do after two years. That's something that eventually we plan to talk to that person or to that fund." So I would be extremely cautious, and I'll be always double-checking the facts, especially about the team's background and also any sort of promises, as Said mentioned, especially when they're big.
Yes, totally. I mean, to give some examples, projects in crypto, some of them are very quick to over-represent things once again. So, for example, they will tell you they have closed an investor when it's just a soft commit, or that they're in advanced discussions with Binance when they just sent an email. And so you have to have the network, the experience to notice these things and just be able to verify. So, we ask our friends at VCs, launchpads, and so on, what the real nature of the relationship is between them and the projects.
Yeah, I think all the points are covered. All the checklist has to be checked. I get a lot of proposals, almost. We have reviewed over 200 of them in last 1.5, 2 years. And some of them are really highly ambitious. Some of them showed them that between now and 2023 January, where their product will be ready, and after that they are going to have 1,500% growth every month because the market is there. And I said, but yeah, there is potential, but how are you going to achieve it? And they didn't have a plan. So you sometimes some of the team members in the financial were like 40 team members, and I said they had names written down, and I said, how can you write down names of 40 people since you have not even started? They said, no, this is our family friends we are going to recruit. So this kind of red flags comes in, and you understand that they don't really have a straight strategy map, and 1,500% growth, 100x promises. These are the real red flags. And I always say, in your website, why don't you put your names of your stuff? Why don't you put your names of your peoples? Why don't you give their LinkedIn connections? We need to know if your team and you are doing a project which you're passionate about, why don't you talk about it? Why it's a hidden website with no names, no businesses, no details, no team? So some of these things really gives you an instinct that I need to be careful.
Thank you for that. I have just one more question to ask the panelists, and then we take the questions from you guys, so make sure to have your questions ready. Of course, we've all been fortunate enough to fail in our life once or twice. What has been some of the most challenging experience in investing, and how has that changed your mindset?
I think usually kind of the worst time to invest is when things are heating up in the market and valuations are getting too high. And if you get caught in that kind of frenzy and craze that's happening at the time, and then you kind of invest in a project, and then the market downturns, and a lot of projects we find, once the market turns and the sentiment is negative, then they actually delay the listing of their token or delay their launch waiting for market conditions. So I think you just need to be wary of market conditions, and also just keep in mind that projects might really delay listing by quite a considerable timeline, especially in negative market conditions.
I mean, failures is sometimes like it's part of your life, you know. I am not talking about crypto investments or this recent investment, but it happened in 2008, and we had launched a fund in 2006, and then we collected a lot of money of my investors whom I had built trust with. And then there was a large crash, and all the investors wanted to exit. So I had to personally pay from my pocket quite a substantial amount to keep the trust alive. And that was the loss. But I learned always in business, when you do business, you have to be ready for losses. There is always going to be risk. And as much as better you do your due diligence, your failure is going to be less. And one most important thing is everyone should learn from their failures, because more and more you have failure, more and more you are going to be a better successful person. I always believe that young people, they are very afraid to fail. I said, no, fail. Form one company, two company, three company, let all of them fail. One day, because you learn from your failures. And then there would be a right time where you learn a lot of things and you do it and you will succeed.
I think, as he mentioned, the worst experience that anybody can have is obviously losing money. And I think this happened recently to all of us. So for me, like a major lesson learned, and this is prior even entering to crypto, like all the way from traditional markets, I always say diversification, and I really believe that. Like this is probably the first rule, the simplest, but it's actually so hard to follow when you get emotional. But I think that if you're investing in crypto, then you should have DeFi, you should have infrastructure, you should have gamify, you should have metaverse. And then don't even stop with crypto. Then you should probably, if you're a bigger scale investor, then get real estate, get bonds, get stocks. Because obviously we always go through cycles, but not always all the instruments are going through the same cycle. And long-term diversification always works. That's why S&P usually outperforms the single stocks because it's a basket. It's like 500 stocks under it. And I think that we should act the same way with our personal investments. And this is obviously not a financial advice. This is just lessons I had learned, things I had studied. The more sectors you're in and the more different type of assets you own, the bigger your chances long-term to build wealth.
Alexander, any failures?
Yes, a lot. I mean, our investment thesis at a high level with gains is one, to follow the trends and ride the waves, right? Which is great. It's kind of easy, but it's also very dangerous because you have to know how to stop before the wave crashes, right? So we did very well with gaming and metaverse last year, riding these waves, but you have to know when to stop. And that's also why our second approach is to bet in the ecosystems that haven't had their moments of fame. So for example, Solana had it, you know, Polkadot had it, but Cosmos maybe didn't have it, Algorand didn't have it. So I think a combination of riding the waves and also making long-term bets that are a bit more hidden are good, and of course, learning from all these failures and always iterating.
Thank you very much. Let's open the floor for questions. We have these magnificent panelists with us today, so it should be some questions out there.
Come on, don't be shy. I know you do have questions, but oh yeah, sure.
Firstly, all of y'all were pretty amazing. Loved the panel talk. Thank you for that. I have a question for Paula. I heard you mention that your view and stake on the metaverse right now, like the metaverse is not that much of a hype right now as much as it was in January. That's what you said. So what's your view on Meta investing about $10 billion last month in just one or two projects? Like, do you think that is like a very big of a hype, or what is it?
Thank you for the question, actually. It's very relevant. You're absolutely right. Well, my personal view on metaverse is that obviously this, for me, it's a long-term trend. I don't see it so much as a hype as it was in the beginning of the year. And since we were reviewing so many metaverse projects, at least my experience and what we had seen from the research is that even the biggest metaverses right now do not have so many active users. So for me, the issue with metaverse is not the investment, not the creators, but more the adoption. We still don't have adoption at the highest level. So you need to get all the users into the biggest metaverses, and then eventually when new projects arise, they are also able to get users. And especially for like new projects that we had seen, once you go back and start checking the numbers, it's quite insane what is the difference between the officially stated users and the actual users. I'm not sure how many of you in the hall had been into the metaverse. Shall we raise hands maybe? I've been because I'm checking projects, but like personally, I haven't been. Yeah, so as you see, it's, the adoption is not that great. So I feel that once adoption gets there, it will slowly evolve. As he mentioned, it's all about social networking. So if I guess like 80% of us here are using, the 20% really feel the need for it.
Thank you.
Very
Anyone
beautiful
else?
answer.
I mean, very quickly, maybe if I can add something on the metaverse, since not many people have tried it, the possibilities are like really amazing, right? You could visit a museum in Asia, you could have a virtual walk with your friend, maybe at some point when the technology evolves, like even feel the air. So it's a way to have more experiences, connect better with people, and there's really like endless possibilities.
I would just add one small note is, just take an example of India when they wanted people to use digital money. It was, a lot of companies had services, but there was a trigger point when government says, I'm canceling this currency, and the currency was closed overnight, particular, and they said, we'll print new currency. And that was a trigger point where everybody started using, even for 10 cents to transfer money through mobile. And this kind of triggers is definitely going to happen. Some incident will happen and everybody will say, yes, now the VR glasses or AV, this is going to be like $100. Every one of us going to have it. Some trigger will definitely have mass adoption, you know. And until such happens, awareness. I would say if we want to be pioneer in this industry, we need to create awareness. We need to know everyone, our neighbors, our family, our friends, what we do. Why are we going into the space? So awareness is very important. And I think we are still premature, but there will be a stage come where there will be a very big mass adoption overnight. And we should be prepared and be ready to be there, you know? Thank you.
We have one more question.
Hi, I think I would give value to what Ms. Paula said, that we have to go as per the time. And I think in this things to know more about blockchain, metaverse or something, the talent is more required for the people and also the risk analysis. So then that is a very clear road path for the people to get in there. How well it is going to be a use case for them, or it is yes or not. So if they go why, and if they don't want to go why. So when we have this, then we have better results. Thank you.
Talking about chicken and egg, or?
Sorry?
Okay, what was the question?
Yeah, is there a question?
No, I like the idea of what she told, so I want to add on that.
Thank you. Thank you so much.
Yeah, we were expecting a question, sorry.
We have time for one more question.
Hi. Everyone is, this can be answered by anyone. All of you look for the investments on the Web3 startups. Now, what is an opportunity for the Web2 startups, those who are scaling in the Web3 or those who wanted to scale in the Web3? Are they the better choice, or those who really don't have an experience in the Web3 and they are building something on the Web3 is a better choice?
I think when you're talking to Web2 established companies and businesses that really want to explore Web3 and are really interested in utilizing Web3, I think it's a less riskier bet than working with a fresh Web3 startup, because a Web2 established company would have, you know, the actual product or service that's been tested, and they have the users and they have the experience, and they just need to convert that onto blockchain technology. So I think whenever we see a Web2 company that's trying to build something on Web3, we get really excited, and as long as the team behind that project or the company is willing to kind of listen to advice and feedback around what they should do, then I think it's a good bet.
Anyone else?
I mean, just quickly, one last general thing maybe is, when you think about it, the crypto markets at its peak, the hundreds of revolutionary startups and this technology that can solve the exchange of value at scale once again, all that combined was smaller than the market cap of Apple, a single company. So I think it's an amazing image to remind us how early we are and that there's lots of things to do.
Thank you, Alex. We are just about out of time. I want to thank these fantastic panelists for sharing their experience with us today. I want to thank Giovanni and the organizers at MetaWeek. And also I want to thank you guys for the great questions. Please make a big round of applause for my panelists and yourself.
Thank you. Thank you.
Thank you very much.
Stay for the picture. Thank you. Thanks a lot. Well, from investing in actual metaverse-related companies and ideas for Web3